Assalamu alaikum wa rahmatullahi wa barakatuh. I hope all the participants and attendees are in the grace of Allah subhanahu wa ta'ala. We are having this session, inshallah, and we will try to keep it, inshallah, as brief as possible and focus on the topic that we have already decided. That is the Sharia governance about the tokenization and block-based tokenization. So, it's a great opportunity to have Mufti Shah Sahab, the chairman of Sharia Board, SECP, and State Bank of Pakistan, with us, and we are greatly thankful for his time that he has invested in this session. These tokenization and what is going to happen in future regarding the Islamic fintech industry is has immense potential. As you have already seen in the video that was played just now by Fahad Bhai, the potential is huge, and people are ready to do something. And I think that technology is the answer, and Sharia is the main compliance requirement. If Allah Subhanahu wa Taala give us this topic and we are able to launch and this successfully, the tokenization of the assets, as we all know, the core difference between Islamic banking and the conventional banking is the real assets. So if the real economy is there and this is being tokenized and people are there to invest in these profitable businesses, this is going to have a very big impact, inshallah. So, without wasting time, I will request Mufti Irshad Ahmed Ejaz Sahab to please start his speech. And we already have these slides, and I will request Ahsan Bhai to please, you can also start the slides if Mufti Sahab may only talk on the slides. Assalamu alaikum. Over to Mufti Sahab.
Alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Dr. Umar and Dr. Fahad Saab. Basically, the tokenization and this topic, the topic of tokenization is a very important topic, especially nowadays. And for the cryptos, if we look at the topic of the cryptos, it is very important to understand there are two types of cryptos which we discuss generally. The first type is classified as a currencies, which we generally call like a Bitcoin. We generally call it coin, or we sometimes call it currency. So there is a first class of the cryptos, which is classified as a medium of exchange, or as a currency, or as a coin. The usage of this class of the cryptos is as a currency, as a medium of exchange. And the second type, which is generally neglected and we generally do not know about that, is the second side. It is a tokenization or fractionalization of the assets. What is the meaning of tokenization and fractionalization of the asset? This is similar to the tokens, or to the shares, or to the units of some underlying asset, which is generally used by asset management companies. If you look at the structure of an asset management company, what they do, they generally collect money from the investors and they invest in underlying assets, whether they are real estate. For this, they classify it as a real estate investment trust, or they are general assets or financial assets. So what they generally do, they receive money and they distribute it in a token or in a units, and they issue the units. And those who are having these units, they are classified as unit holders. So what do we mean by tokenization in a specific cryptos perspective? We mean that the fractionalization or distribution of the underlying assets in the form of tokens, which are tradable on blockchain, not a classical model of asset management companies which are tradable on some other platform. So this type of tokenization is important, and I think in coming future, this is very important for us, and especially for those institutions which are ready to receive public money and they want to invest. For example, look at the sector of real estate in Pakistan. In Pakistan, real estate sector is generally run by non-organized sector. Non-organized sector means the money that is coming to real estate is generally from those who are not paying the taxes or who are investor, but they are not in a regular form. They invest out of the regular form. So they do not go to fund management company. They do not go to banks. They generally go for this investment. So there are multiple proposal by real estate investors. If a lot of you are aware of some structure which are very common in Pakistan, especially in some upcountry side, what they do, they offer public to buy a plot or an apartment or a shop in a big project by just paying 100,000 rupees or 500,000 rupees, while the price of this flat or this special house or this shop is about, for example, 100 million or 500 million sometime. I mean, the very big house or very big plaza. So if a price of a unit, for example, is 10 crore rupees or 5 crore rupee, and a person is investing only 500,000 rupees, how it this person become owner of this property? Obviously, he cannot be owner of this property. There are multiple owners who are owning this property. For example, more than 100 or 200 people who have contributed with 100,000 or 500,000, and they ultimately become owner of this house, which cost 3 crore or 5 crore, or for that matter 10 crore rupees. So this is basically, if you look at this is fractionalization of underlying asset. But if you ask them what regulation is governing this fractionalization, there is no regulation. They are just entering in these type of investment by signing on the stamp papers or some legal agreements. And in absence of these framework or this regulatory framework, what happens in case of any problem, in case of any conflict, or in case of any conflict and a difference of opinion between them, those who have powerful people, who have powers, and they are powerful people, they can win the case, and the investment of other who are not powerful and who are weak in regulatory control and legal control, generally they lose their money. So all these happens because very loose regulatory framework. So by the tokenization or fractionalization, and especially registered tokenization and fractionalization, we can solve a lot of these problems which are now happening in Pakistan and in some other surrounding countries. The investment of people, very small investment of people from general public, they go into some projects which are very big projects, and there is no regulatory control. There are some other platforms which are available through capital market. We know that the capital market institutions are there. For example, fund management companies and asset management companies and real estate investment trusts. But unfortunately, they are not very common in Pakistan. And it should be very common in Pakistan, but unfortunately, they are not common in Pakistan. And for this reason, you are aware that the fraud scheme, the Ponzi scheme are very common here in Pakistan. So from the from this very important perspective, we can say that the tokenization and fractionalization are very important and the need of the time. And also from the Sharia perspective, if you look at this tokenization or this fractionalization from the Sharia perspective, there are very few rules which are very difficult. For example, the Sharia governance, if you look at the prohibition of interest, prohibition of gharar, prohibition of uncertainty, and any permissible activity, all other areas are permissible. So the from Sharia perspective, the Sharia governance requirement are not very difficult. They are very easy, and especially in Pakistan, and especially in areas where generally people like to invest. Next slide, please. And why Sharia governance is important. But when we talk about the tokenization and fractionalization or unitary distribution of investment, why the governance, Sharia governance become important? Very logical. When we go to general public and we claim that we are accepting your deposits and your money for the sake of pure Islamic perspective investment, and you will not be earning any haram, you will not be indulging in any impermissible activities, then the responsibility of governance lies on our shoulder, and it's become very important. And for this reason, You are aware of the Sharia governance framework and regulatory arrangement, which are now very common in Islamic countries. Why? Because it was felt some years back, 5 years and 10 years back, that if group of people establish their company and they start claiming that we are in taking your money for Sharia compliant perspective, and we will be creating return to you in a Sharia compliant manner, then there should be a control. There should be a check and balance. And for this reason, there was a concept of Sharia governance. Now the Sharia governance, now we are ahead of this concept only. Now we have not only Sharia governance, but we have structured Sharia governance framework under which we observe through Sharia compliance mechanism, through Sharia audit mechanism, Sharia internal audit mechanism, Sharia external audit mechanism, and Sharia inspection and Sharia review. So around 3 to 5 mechanisms are there by which we can ensure Sharia governance. And this has become important because if we are taking the deposit on the basis that we are providing halal investment, then there should be some check and control. And you know that in absence of this check and control, we cannot trust on only words of mouth, because we have seen that people sometime at the start of the business they are careful, but later on they become lenient and things go into the non-compliance ways and non-compliance regime and then it become ultimately a problem. If we remember some scandal in the name of the mudarabas 5 or 10 years back, we have seen this thing where religious people at the start of the mudarabas they were confident that they will do something very good, but ultimately they end up with some corruption. So this is therefore the importance Sharia governance become important. Next slide. And the challenges in Sharia governance in rapid technological innovation and outpacing the traditional Sharia framework. For technological basis, technology-based organization for technology-based operation, obviously the Sharia governance with classical way methodology is becoming a challenging. But the thing, very fortunately, there are some Sharia compliance companies and Sharia compliant solution provider who are working on technology-based Sharia governance framework and technology-based area compliance and assurance. So therefore, some issues really, especially related to technology, for example, smart contract and some robo operations where human involvement is less and technology and machine involvement are there. So there are some serious questions. How can we treat a smart contract, and what about the machine offer acceptance? Can we consider it as a delegated Sharia operations by machines which have been delegated by humans, or we do not consider it and we consider it as a non-compliant. So these are some debates, these are challenges. But I think in coming future, we are expecting from international bodies like accounting and auditing organization, I mean AOF, that they will bring some instruction about these some technological advancement and development, so that we will ultimately inshallah be having some Sharia governance controls for smart contract, for robo operations, for machine accounting entries, so that ultimately the Sharia challenges will be inshallah ta'ala tackle here. An important thing or the blockchain, very important issue for the blockchain challenge. Blockchain basically is a decentralized, basically in nature, the crux of the blockchain is its decentralized nature. And this is the topic which is very important in Sharia Circle. They are exploring about the status of non-controlled decentralized operations. If there is no control, no centralization, no control from the government, what will be the status of these organizations in case of the conflict? So there are some Sharia scholars who are not comfortable with this type of freedom, and they say there should be some control by the government so that the operations and the financial operations and financial activity under this decentralized environment can be controlled, can be regulated, and can be settled in case of the conflict and in case of the problems. So therefore, we see that there are some fatwas which are pending on technology and fintech. And the reason is that some Sharia scholars still they are not comfortable with this type of free, independent, autonomous regime, which is called decentralized, because they say that in case of the conflict, in this case of the operation, without having any regulatory framework, any controlled environment, things become very messy and very problematic. But still, these things are under debate. So I think we will be seeing, inshallah, in the future some solutions for that. Next slide. And fintech is a very common term. Fintech means any finance that is related to technology, and it is not limited to blockchain. It is all about things which can be done on online basis. So whether it is related, it is done on blockchain or normal internet or non-distributed ledger or distributed ledgers. These all fall in the ambit of fintech from Sharia perspective, because where non-human involvement on machine basis are there, these are classified as on the basis of fintech. And as I mentioned, that the fintech is a topic in which smart contract, in which some robo operations, some machine operations, some machine offer acceptance, some human acts which have been replaced by machines, they are under discussion and under consideration of Sharia scholar. Still, the decision is pending, so we are waiting. But I think some positive decisions will be there with some limitations. And the tokenization distribution, converting physical or digital assets into the digital tokens or a blockchain on the blockchain. This is simply uh, tokenization distribution, similar to units, similar to shares, or similar to fractionalization. So in case there are some investments which are received for the purpose of investment in real estate or some other assets, and the government is permitting them to distribute it on a blockchain on the basis of tokenization, that can be done. But still, Pakistan, the tokenization law is not there. Probably Securities and Exchange Commission will introduce it in future, inshallah. So if they are introduced in future, so this become ultimately easy, because people now are aware with with these type of operations, financial operations or marketing operations, which are IT based. I mean e-commerce. So instead of introducing people with normal capital market operation, it is, in our view, it is easier for people to introduce them to tokenization, because after enabling of the tokenization, everyone can have this token in his digital wallet and can operate like they are operating on Daraz and like they are operating on any other e-commerce gateways. So ultimately, the tokenized assets may be easily understandable to the public as compared to the normal classic capital market operation. Next slide. How tokenization work? Asset selection, obviously in a portfolio, similar to any other. We select, for example, if we receive, just an example, if we receive 1 billion rupees and we select it to invest in a piece of land, so the asset selection, then the token creation, I mean the distribution of the value of this piece of land into tokens. For example, if we decided that every token will be equal to 1 rupee, and the price of the land is 1 billion rupees, so the token will be 1 billion tokens. And if we agreed on the distribution of 10, then in that case, the value of the token will be lesser than the value of the land. So this is similar to stock and similar to units. Fractional ownership means simply that if the underlying asset have been distributed into the fraction, into the pieces, into the unit, into the tokens, so everyone who has this much token will be considered the owner of the underlying asset on a pro rata basis. So if any person has 100 tokens out of 100,000 tokens, it means he has ownership of an underlying asset on pro rata basis up to the amount of 10 tokens. The simple distribution, and because the Mabrook token is covering the text, thus I'm not able to. The last point, automate transaction and compliance and governance. If you can remove the word Mabrook, which is covering the presentation. So compliance and governance. So the compliance and governance mechanism. But as I mentioned earlier, that this is not possible without having a regulatory framework by a regulatory authority. And probably in Pakistan, we expect that the Securities and Exchange Commission will ultimately be the, the back runner and the regulator of the tokenization tokenization framework, which may be available in coming future. Next slide. Real estate, Islamic sukuk, commodities, halal investment, all these are possible tokenization asset. In case of the Islamic sukuk, there is a concept that there should be a basket of sukuk. And the basket of sukuk, for example, if there is a basket of sukuk of the size of 10 billion Pakistani rupees, and multiple sukuk can be put in this basket, and everyone who has the token of this basket will be considered the pro rata owner. This is similar to fund of fund, or this is similar to fund management company. So this tokenization of underlying sukuk is possible. Commodities tokenization, for example, gold and silver, any other, this is possible in a good manner if mercantile exchange of Pakistan is active. Mercantile exchange of Pakistan is not a very in a very good active position now. But if they get activated in coming future, then the commodities may also be fractionalized in coming future. And lastly, the halal investment, Sharia compliant equity tokens can also be. This will work similar to the shares and stocks. This is also one of the possible ways that a portfolio can be made and tokens can be issued, and the underlying the amount can be invested in halal avenues. So this is one of the possible utilization of tokens. Next slide. Accessibility, transparency, efficiency, and the liquidity. All these possible benefits are accessibility. As I mentioned, that we are familiar with e-commerce. Lot of people in Pakistan, even if they are not literate, they can easily go and trade on the RAS-PK platform and some other digital platform. But as compared to this, if you ask them to go to CDC, centralized Central Depository Company of Pakistan, or go to stock exchange, or go to some other these big institutions, and opt for trading, even some literate people who are degree holder in finance, they are not able to operate. And this is because of the operational ease that is available in e-commerce. So I think this accessibility is a very important point, that everyone in Pakistan who has a very simple knowledge can easily go for these tokens, for investment in these tokens, as compared to going for investment in a fund management companies or asset management company. And I generally say this: if you ask any student of this university, even if we are having a seminar, and ask anyone, can you go and open an account in an asset management company? For that matter, if we take the example of Mizan Asset Management Company, some of the student but if I say the majority of the students, they are not able to understand how to go to this company and open an account. But if you ask them to go to the RAS and open your account, they can easily do it. So it means that the digital utilization of platform is very common in Pakistan and in countries. So accessibility is very important. And this is, and transparency, that the transparency is here, especially in blockchain. Transparency and efficiency is also there. Faster and cheaper transaction, and liquidity easily can manage. But as I mentioned, that all these are dependent on the permissibility from Securities and Exchange Commission. Before that, the token operation and all these things are not possible here in Pakistan. Next slide. Sharia governance in tokenization, avoid riba, gharar. That, like similar to Sharia compliant operation, there might be some Sharia certification for tokenization. There are international Sharia certification for tokenization in international markets. I was part of some Sharia certification process, where we have issued Sharia certification for tokenization, and we have seen that what assets they are using, what contract they are using. After the reviewing of the contract, the underlying asset, and the method of revenue generation, we have issued a fatwa, and we have issued a Sharia governance clearance certificate. So similar on these ground, these Sharia governance certificate can be issued in those operations which are free from riba, free from gharar, free from qimar, and free from impermissible arrangement and impermissible contracts. Next slide. Role of Sharia scholar. Obviously, there are two types of role Sharia scholar: initial role at the time of the approval and inception, and continuous monitoring role. Both roles are available, and there should be both roles: review and monitoring and auditing of the operations. So these are two roles which are very common nowadays. And for tokenization, these are there, and this might be dependent on the on the periodic reporting of 3 month or quarter or annual reporting, and checking of the approved procedures. There are some in some countries, those some people are working on automated generated Sharia reports. So the system will automatically generate Sharia report. In case of the violation, the report will tell about the violation. So I think for the fintech companies, it is better that they include from the inception the concept of automated reports. So it will ultimately help in working of Sharia scholar. Next slide. Sharia compliant tokenization, blockchain sukuk issuance, streaming from issuance and tokenization real asset. These are some blockchain possible use of blockchain sukuk issuance, but still tokenization of sukuk still is not there, especially in Pakistan and some countries, because the sukuk fall in the ambit of either Securities and Exchange Commission or the central bank. And for central bank and the Securities and Exchange Commission, the tokenization is only possible if the tokenization is approved by these regulators. So in some countries these are not possible, but in some countries these are possible. So if blockchain based tokenization is permitted and it fall in the ambit of control, like in Abu Dhabi global market, they allowed having blockchain facilities, tokenization, so they can allow, and the sukuk can be structured on the basis of sukuk, general sukuk, and then they can be fractionalized and tokenized and can be traded and electronically. Next slide. Sharia compliant assurance of Sharia compliance is a challenge in some asset class, not in every asset class. For example, in real asset, this is not a big challenge, but in case of the gold and silver, it has become challengeable. Also, if you have a portfolio of a trade portfolio of murabaha or salam or istisna, in that case, the Sharia compliance become important because they keep the minute monitoring and I mean the control, full control, and governance become important in this situation. And complexity in structuring smart contract, as I mentioned, and the lack of global standardization. So in a smart contract, in a robo operation, in a machine replaced human operations. So these are some issues. Therefore, Sharia scholars are still considering the issuance of fatwa on tokenization and use of machine or blockchain instead of human operations. Next slide. Importance of aligning up Sharia and local law. As I mentioned earlier, these are very important. Current regulatory gaps between tokenization and Islamic finance. There are some regulatory gaps. The regulator is not comfortable with still with the blockchain, so we don't know whether the blockchain is easily acceptable or not. But in some Islamic countries, as I am aware of the Abu Dhabi and also in United States, which is not Islamic country, but they have approved some structure of blockchain tokenization for asset class, not as a currency, but not as an asset class. So, need for global collaboration among Sharia scholars, fintech. Global collaboration among Sharia scholars can be achieved by a standard that can be issued by AOFE, and I am aware that AOFE is working on some digital standards. So maybe they will bring these digital standard in 2026 or 2027 in coming 3 years. So after coming these type of global Sharia standard, things become inshallah in a control. At least 80 to 90% of the issues can be managed by issuance of these standards, inshallah. Next slide. For Islamic finance, obviously unbanked Muslim population. This is the opportunity, and as I mentioned, people are more familiar with e-commerce and mobile-based operation, mobile-based buy and sell. People are very familiar with this as compared to classical method. So there is a very good opportunity if we introduce in coming 5 years. So everyone in Pakistan, whether he is a literate person or illiterate person, can be able to invest through this blockchain and these type of mobile-based operations. And growth in halal investment, obviously, this is the growth leveraging technology of efficient and transparent compliance audit. Obviously, we need some control because in technology there is a good side and a bad side also. The technology has a some very dangerous risk of that the cheating and the misuse of the technology is very easy in countries like Pakistan because people are not aware. So you are aware of multiple mobile, misuses in which accounts of people have been compromised and amount have been debited from them, and their security have been compromised. So these are some very big challenges which need to be to be carefully dealt in future. Otherwise, countries like Pakistan, where most of the population they are not aware of the security feature, can be target of fraud, where the control of legal control is very less. So everywhere you will every time you will find people are trying to steal money of others without fearing of God and law. Next slide. The future of governance in fintech, obviously, artificial intelligence, blockchain, and smart contracts, global Sharia standards. All these are some future of Sharia governance. As I mentioned, that AOF is preparing to issue a standard. Obviously, Islamic Financial Services Board they will issue some standard. So by issuing these type of regulatory, accounting, and Sharia standards, I think in coming 3 to 5 years, things are very inshallah in a very good control in a very good regulatory environment. Next slide. A key takeaway: Sharia governance ensures ethical compliance, financial innovation. As I mentioned earlier, that in case any company, any organization claim that they are creating Sharia compliant income, then their responsibility become very high towards the investor, towards those who are investing with them. Therefore, the governance become important because it ensures the compliance, and also tokenization of asset can revolutionize Islamic finance because it is increasing accessibility and transparency, and people are aware of e-commerce, so it is very easy for them to use these type of platform for parking their money into Sharia compliant asset and into Sharia compliant revenue avenues as compared to other classical method. And collaboration between Sharia scholar, fintech expert, and regulator are very important and crucial as we mentioned and discussed. Next slide, please. So this is all about today's presentation of the potential of the fintech and tokenization and other operation in Islamic countries and especially in Pakistan. So this is all about my session. And over to you, Dr. Rafiq Umar Rafiq.
Uh, Thank you, Sheikh, for this informative session. We already have some question answers in the Q&A session, and I think you also have the access. I shall read the questions, and I will let request you to please answer. The
Please.
first question is basically regarding: is there any cases when Islamic banks have invested in tokenized assets in the world globally, as Islamic banks invested in the tokenized assets or not?
No, as yet not, because the tokenization is still uh, is a weak area as compared to the other regulated area. So there are some regulations are required. So Islamic banks they are not interested now in absence of the regulatory control. But in future, when regulators like central bank and capital market authority, if they issue asset class and asset portfolio rules for digital assets, in Islamic investment management companies and Islamic bank, I think they may invest in some tokens, but still not in because of the absence and gaps which are still there.
There is another question from Lokman Hoxa. He asked that when trading these tokens, should the rules of currency, that is Bay'u Sarf or general commodity exchange rules, these rules apply in these transactions or not? This is the question.
No, as I mentioned earlier very clearly, that when we talk about the tokens, they are not currencies. The tokens, not currencies, the coins are currencies. So we are discussing only the asset class of the cryptos, which are digitally distributed on the basis of tokenization or fractionalization. So the rules of BSRF are not applicable here. There are applicable rules of of simple assets transaction rules.
Okay. There is a third question from Sadaqat Saab asking that underlying asset is should be halal. So which type of assets may be haram?
And for example, the shares of the conventional insurance companies or any other impermissible assets which are not classified as permissible. In countries like Pakistan, generally we do not face this problem, but in other countries, for example, the ownership of the hotel, for example, the ownership of the casino. So all these are impermissible and impermissible asset classes which are not permissible from Sharia, and the income is also impermissible.
There is another question from the same person. He asked that if there are, for example, 100 apartments in a building, so the tokenization is being done with the one apartment is equal to one token or some or what? He asked this question.
It depends. It depends. As I mentioned in my introduction, that it depends. But obviously, the tokenization will not be equal to this to the count of the flat. Otherwise, what is the need for tokenization? If there are 100 flats in an apartment, obviously at least a flat should be divided into 10 or 100 tokens. Otherwise, what is the benefit of tokenization? So generally, as I mentioned, that if the price is very high for a flat, for example, if the price is 3 crore, so preferably this flat should be distributed into 100 or 1,000 tokens, so that 1,000 investor can invest in this. So the objective of the tokenization is the distribution of the high value assets into fraction and a small part, so that a small investor can invest also.
Okay, thank you, sir. There is another short question regarding real estate payments. He asked that can we pay the real estate payments through cryptocurrency or blockchain? And is this Sharia compliant?
See, this question pertains to the status of the cryptocurrencies. And as I mentioned, we are not holding a seminar on the cryptocurrencies. We are only holding a seminar on tokenization. So we are not discussing the Sharia status of the cryptocurrencies. But as far as I'm aware of the fact, Sharia scholar, they are considering the status of cryptocurrencies. So if the cryptocurrencies have been permitted by Sharia scholar, then the payment through cryptocurrency is permissible, whether you pay for property or for anything. And if they do not allow it, then you cannot pay. But as far as I'm aware of the Pakistani environment, in Pakistan, the use of cryptocurrency as a medium of exchange still is not permissible.
There is another question, sir, regarding what are the differences between Sharia compliant fintech and normal fintech?
Sharia compliant fintech takes care about the Sharia principle like prohibition of interest, prohibition of gharar, prohibition of timar, and compliance with the Islamic law of contract. And simple fintech, they are least bothered about these things. For example, in simple fintech, you can find some interest-based investment also, some impermissible activities also. So this is the basic difference.
Okay, sir. There is another question that how a fintech shall be considered as a non-Sharia compliant. I think this is more or
As
less
I
the
meant,
same question, and you have answered it.
yes, yes, yes.
And there is another question from Daniyar Mamurov. can Waqf assets be tokenized in the future? And is it possible from Sharia point of view to invest through such platforms?
Yes, Waqf or any other asset class can be tokenized through in future. But see, the objective of the tokenization is the marketability. I mean, the buying and selling, and Waqf cannot be sold. Therefore, the no need for tokenization for marketability of the Waqf. Yes, we can receive some investment in case of the chunk. For example, if you say we want a very big building of say $1 billion, which will be used as a Waqf, but we can receive crowdfunding or through token some amount on blockchain, so you can use it. But for the tokenization, you remember in mind, Waqf cannot be sold. So the objective of the tokenization is the ease in marketability, and for Waqf we do not need market. So therefore, I think practically we do not need tokenization of Waqf. But from the academic perspective, yes, any asset can be tokenized.
Okay. There is another question regarding, he basically confirms that tokenization is sort of units managed investments or
Similar,
not.
similar to that. As I mentioned, similar to that. But it works only on blockchain, and other units are not working on blockchain. They work on simple register of central depository company, for example. So these are units of managed investment. Yes.
There is another question from Ariful Haq Saab. Can we raise fund for charitable assets like building masjid or madrasa?
Yes, we can raise fund, but this is all about crowdfunding. This is not the tokenization. For tokenization, as I mentioned, for tokenization we need buy and sell. And here in charitable assets, if you want to collect money, I mean, if you want to do chanda, which we call in English crowdfunding, so this is possible without having a token.
Mhm. Mhm. Okay, and there is, I think, one of the last question that Sharia screening criteria may be formalized as we follow in Sharia compliant equity shares.
Yes, obviously, in case of the Sharia screening criteria. But here is the difference between Sharia screening criteria of companies and Sharia screening criteria of funds. Because the companies, in companies we see running businesses. They are running businesses. They invest and they earn money. And in funds we have still assets. But obviously, the Sharia screening criteria will also be formalized for this sector, inshallah, in future.
Okay, and very thankful, especially for Sheikh Saab, you have given um, the valuable time to us. And I think your input is very valuable regarding the topics and the Sharia governance of these new assets, inshallah. I think that shall be coming into our markets in future. And technology is evolving very, very rapidly. So I think what we have in our head shall change after 5 years or within 5 years or
Inshallah.
7 years, inshallah.
Thank you very much.
So, from
Thank you very much. And thank you very much. And because the asset time
I'm
is
really thankful.
starting.
Thank you, Sheikh. Assalamu
So,
alaikum for all.
thank you. Walaikum assalam.
I'm really thank you all the